Hey traders, checking in on the stock market today. Bears in control the vast majority of today, but daily candles won't show you that because the final hour, some big bull volume showed up. FOMC Wednesday, let's see how things are shaping up. So first we'll go over a little trade review of how I was trading today, and then we'll look forward and actually look at the past as well, as far as how we have some similarities shaping up between the current setup and the setup leading into the last FOMC mid-March. So looking at the S&P 500 heading into this open this morning, I was looking to be a patient bear, knowing we had tons of space because we dropped all Friday, tons of space for hourly lower highs to be the result of any bounce. So I'm not looking for a bounce. I'm just patiently waiting for a bearish entry that I am comfortable with. So we saw the bears control the open. We saw, this is a 2-minute time frame. This was a V-shaped bounce with no trend change. So I top fished the high of the day resistance and entered SPXS, exited half on this initial pullback, and then ended up stopping out when we did see a new high of the day. I actually might have entered QQQ. I switched back and forth. Generally speaking, if I see that one of our major sectors is weaker, that's the name that I want to be looking bearish on. So this morning, XLV was standing out as a lead bear, which tells me SPY is going to be weaker than QQQ. And again, the most common grouping that we see recently, tech, semiconductors, and growth, all on one side doing very similar things. XLV, XLU, XLF, commodities, they've all been on this side doing similar things. Since 2 Thursdays ago, everything dropped in unison. Prior to 2 Thursdays ago, tech, growth, semiconductors leading the way down, and all those other names that I mentioned were much stronger up at their highs. Remember how strong commodities were? Uranium names, XLV was all-time highs, XLU was all-time highs. Today, these names all over here were weaker, and these names, which were previously weaker, were all stronger. I'll talk about that in just a moment because we want to see, if we're bullish, you want to see QQQ leading the way to the upside, in my opinion, and I'll talk about why. Anyways, I took a bear entry attempt on SPY, saying, all right, well, if this is the top of our bounce, it's going to be an hourly bear flag, and sold half real quick because I was not confident that the hourly lower high was being set, stopped out break even. All right, back to break even. Because I stopped out break even, I'm right back to looking for a bearish position. Why? Because I didn't lose anything, and we're still looking for an hourly lower high. If I had lost something, I would be much less inclined to be looking for another trade right out of the gate, just looking to get back into it. I would be more protective and more patient. But that's why I stop out break even often. Had a nice setup here, missed this one, big enough 5-minute pullback to look for the lower high and a clear top fish. So after that drop, that must have happened. Yeah, I was out watering the garden at that point in time. I was going to say, how did I miss that? But at that point in time, I said, all right, well, I just have to patiently wait because I don't have a clear setup that I like. And I said, I am going to look for a 15-minute lower high to be scouting a SPY bearish entry from here. So at this point in time, I was watching this low. We lost a 15-minute support level and broke support. So this was the 15-minute lower high I was scouting, because now I've got the high of the day as a clear resistance. And in my mind, I'm saying that's our hourly lower high compared to Friday's levels. And now I'm looking for an entry in case we follow through to lower lows. So I zoomed in and identified what stood out to me as a broadening wedge. And so I had this resistance line that I was keeping an eye on. And I entered SPXS with an initial scale in on this 1-minute bull move that got a bit extended. I didn't even recognize that the 1-minute RSI was hitting 70, but that would have been one piece to the puzzle. And made a bearish entry. And again, did the same thing where, is that where I entered? Yeah, up here. So I did the same thing where I exited half on the initial pullback and then just set my stop above that high. If that's the 15-minute lower high, I nailed it. And if it's not, I will stop out break even. And so the bears then followed through for the rest of the day, and it ended up being a really nice win. And into the end of the day, I had the thought, I'm about to live stream for ChartGuys members at 3:15, and hourly RSI was oversold. I don't want to swing that position. I know it's a day trade position for me, so I know I'm going to be exiting. I decided, I had this moment where I thought, I'm either going to exit when we lose the 5-minute lower highs, or I'll just make a simple statement. When bulls confirm a 5-minute trend change, I will exit that position. And I'm very grateful that I determined, I'm just going to exit at the 5-minute lower highs break. That's going to be enough for me. I want to lock in this win. It's over a day maker at this point. And had I waited for a 5-minute trend change signal, I would have given back a lot of that profit. And that's what happened here, where bulls finally punched bears in the mouth to a small degree. They punched the bears in the mouth because they saw a bull move over a 1-hour time frame that erased 4 hours of bearish action. And again, they did so without changing the trend. So you better believe that there were traders out there that said, well, I'm not going to cover my short. We haven't even changed the 5-minute trend yet. Next thing you know, you get back all your gains on the day. So I'm very fortunate that I made that decision. And honestly, the fact that I was going to be live streaming and not able to pay as much attention as I wanted to was a factor in that. So that's how I traded today. Just a couple trades, not much going on, but that bear move was enough for a solid win. Then that big move takes place. What stood out for me was the volume real quick. To see increasing 5-minute volume there is notable, but also look at that 5-minute volume. It's some of the highest volume of the day happening at 3 o'clock. If that's happening at 3:45, it's not unusual, but happening at 3 o'clock, okay, that's notable bull volume. And if you look at that 15-minute bull volume, it's going to be too spread out there. But if you added up these 3 5-minute candles and the volume that we saw there, it's probably the highest 3 5-minute candles of the day. So a lot of follow through there. All right. So in my opinion, what's going on there, that is shorts taking profits heading into the FOMC. Why? Because shorts have had absolute complete control. They've enjoyed a lot of downside action. The FOMC is potentially priced in a good bit. The market is pretty certain what we're going to be looking at in terms of rates. We don't know what we're going to be looking at in terms of expectations of hikes for the rest of the year or the language that's going to come out of the Fed and Powell. But we saw a big bull move off of the reaction to the last FOMC. So now what we're looking at from here, before we go through our regular technical analysis, and grateful members jogging my memory a little bit, because I forgot that I used the last FOMC reaction to establish my long Facebook and Tesla positions that I then held for multiple weeks for big gains, which were my last notable bull swing trades that I've made in the last 6 weeks. And so I then was looking back and saying, oh yeah, I forgot that's how it shaped up. And I then looked, okay, well, how do we bottom back then? What was going on? And here in the S&P 500, I have some trend lines that I'm keeping an eye on. I like this support downtrending line. We've touched it 5 times. That tells me it's definitely valid. And what we had last time leading into the FOMC was a daily bounce into a lower high, a bear flag confirming with no follow through. And then FOMC day was, I forget if it was the 15th or the 16th. I believe it was the 16th. Was that Wednesday? Yes. So the bounce started the day before the FOMC, got going significantly the day of the FOMC, and then a lot of follow through from there. But what stands out to me is the downtrend support line, the bear flag with no follow through into the bounce. So to me, here's the NASDAQ, again, very similar, downtrending support line, bear flag confirmed, 0 follow through, 3-week bull rip. Bear flag confirmed, 0 follow through. It's just 1 day earlier this time around. So now what am I looking for? Well, I go back and say, all right, well, what was I looking at last time around? And fortunately, Twitter can tell me. So March 16th, best case for market bulls, in my opinion, is a bearish initial reaction to the FOMC. I said for all the rest of the day, it didn't end up being the rest of the day. We had that drop down and then quick V-shaped recovery, but I was ready to buy bull. And then it was this inverse head and shoulders that I was keeping an eye on. So I can now look at the current setup and say, well, if we see a green day tomorrow, and that's the big if we see a green day tomorrow, we've got another 4-hour inverse head and shoulders for green tomorrow, shaping up in a very similar way to the last time around. So that's definitely perking my attention as a bull for the first time in a long time, or at least 2 weeks. I guess that's a long time for a day trader. So getting my attention, and just keeping an eye on similarities to last time around. What was also key last time around? QQQ led the way up. QQQ divided by SPY, this chart shows us relative strength. So we've led the way down. During that 3-week bounce, we led the way up, and look at today. Now, granted, today is not unusual because we've seen this a couple times over the last couple of weeks, but it only lasts one day at a time. So if tomorrow, and more importantly for me, if after the FOMC reaction, if we are green and QQQ growth and semiconductors are leading the way to the upside, I'm going to just say this is the exact same thing as last time. And in an ideal world for the bulls, that would mean that we see bounce follow through to get to this downtrending resistance line, which again is a long ways away. It would still be a weekly lower high on a bounce. Anyways, this is just looking ahead and saying, okay, well, I can potentially formulate a game plan to be looking for bullish entries depending on the FOMC reaction. And again, it's not the initial reaction I care about. I don't care about the reaction from 2 to 4 p.m. on Wednesday. I care about the reaction Thursday and Friday once things have digested. And again, if we look at what the market did last time, it was all bull from that point forward. Where if we go back to that reaction, it's this lower wick right here where bears came out swinging and then they got eaten up. That's your 2 p.m. reaction. And by the end of the day, bulls then took off for that multiple week move. So I'm not making any predictions, but I know that I now have enough previous history and I'm reminding myself, oh yeah, I was real bullish back then because the setup gave me exactly what I was looking for. So what I'm going to do heading into Wednesday and Thursday is formulate a similar game plan where I say, if this trade sets up in this manner, I'm going to go bullish. So that remains to be seen. I'm not even going to attempt to formulate that game plan until after tomorrow's entire trading day is complete. But once it is, I will establish a scenario where I lay out the game plan, and if the trade comes to me, because again, it came perfectly to me last FOMC reaction. And that's probably the most aggressively I've ever traded an FOMC reaction in my life. So that gets my interest. So we'll see how tomorrow goes and then how I shape up a game plan from there. In the end, we haven't proven a whole lot. We don't have an hourly uptrend. Yes, we put some pressure on bears. Yes, we got bears' attention, but we need an hourly trend change to confirm to the bulls on SPY and QQQ. Again, keep an eye on this QQQ divided by SPY chart. If it is going up, that is notable to me. And if it is not, when I was looking for the weekly high or low on SPY and QQQ, I was watching this chart back here. And it was a red flag to me that QQQ could not lead on a bounce. If I'm going to have confidence in the market bulls, QQQ has to be leading for me. Why? Because every time during this entire period of weakness that we've seen any kind of meaningful bounce, that has been the case. So QQQ and SPY must confirm hourly trend changes to the bulls tomorrow. If they do, high of last Thursday is key resistance. That's our daily lower high resistance. And again, at that point, I'll be watching. If we reject from that level, it'll be the same setup as the last 4-hour inverse head and shoulders into the last FOMC. We were green. We were testing resistance. The initial FOMC reaction rejected from resistance. We set a very quick high or low and then broke bull. So this is just the first tiny little seed for establishing a trade game plan. All depends on tomorrow. SMH, negating the daily bear flag at this point. Bulls need to get over 242.67 to confirm a little higher low and higher high, which would obviously stand out if bulls can pull that off. It too is a falling wedge type setup. So just enough to pay a little bit of attention to the bulls. So SMH, got to break 242.67. SMH has relative strength comparative to QQQ over the last few days. This was a notable bounce that took place. The 3-week bounce, QQQ is leading SMH, but SMH is leading QQQ this time around. Again, what I care most about is QQQ divided by SPY. Who is leading on the bounce? Gotta be tech, semiconductors, growth. The names that were beat up the most on the year. Tesla, significant bounce off the low of the day. Hourly trend change confirmed to the bulls into the close. And now it's all about 935 resistance, because if that level breaks, you can call that a quick little higher low and higher high. And that would be the first baby step indication of a monthly, well, it'd still be a monthly inside bar. I'm going to go to the 2-week time frame for clarity here. So we're trying to set a 2-week higher low to remain within a tightening range. Need a daily trend change to the bulls to do so. But Tesla certainly standing out stronger overall. If we look at the weekly time frame, Tesla divided by QQQ, still certainly stronger, bigger picture. But need to break that short term. Pretty much all names, high of Thursday is key. And actually for Tesla, it's high of Friday, but most names it's high of Thursday. If we don't break those levels, bulls don't prove anything and daily lower highs remain. Healthcare, the weakest sector this morning, easily, out of the major sectors that I'm watching. So solid bounce on the hourly, but a trend change is needed. Then we zoom out and scout a daily lower high with a lot more space for it. And again, XLV does not matter as much to me here, because if XLV stays weak and if XLU stays weak, but QQQ and growth and semiconductors are leading, that's what matters more to me as far as believing the market bounce. If there is a market bounce and QQQ is not leading, I don't trust it. XLF, weak today as well. Got to bounce into the end of the day. Same thing as everybody else. Needs the hourly trend change. Daily resistance will be 35.87. It has definitely been one of the weaker names the last 2 days. IWM, bear break today. Lack of follow through. But again, still need the hourly trend change. 1 hour of bull action is nice. It gets bulls excited because it's been a while, but follow through is needed. Hourly trend change needed. Then we look to the high of Friday, 191.73 as the most important resistance level. Biotech sector held the low of last week, and if bulls can get over 77.92, it'll stand out with a momentum shift. So again, our weakest sectors are trying to lead the way on the bounce. And if we look at XBI divided by IWM, that shows us a bull correlation standing out in a big way today. When was the last time the biotech sector had a bull correlation to IWM? Our 3-week market-wide bounce. With FOMC right here. Baba. Daily, healthy. Weekly, higher low. Certainly looking like it is set. It'll be all about 124.11, big picture. Have to double check the earnings dates because TradingView is bad at Chinese names earnings dates. But Baba divided by QQQ, again, remember how it started to show us strength. And it's been nothing but follow through since then. So just these little clues, again, not enough to establish a trade game plan around solely this correlation information, but it can help us with what direction to be looking, and it can help us know to be a little bit more aggressive, perhaps. And if QQQ divided by SPY is leading the way up on a post-FOMC reaction, I will be a more aggressive bull than if it is not. So Baba, hourly, did change the trend into the end of the day. So we're just looking up at 103.52, 104.24 as we try and see continuation here. Significant move off recent lows. And now it's just a question of, can we confirm the weekly trend change, or do we continue to tighten up for potentially another month? It's a very wide range. Crypto mining names stood out today. Hourly trend change, not yet. But look at the nice equilibrium the last 2 days. Dump on Friday to the low of today. So I just view this as a dump. Lower high, higher low. If we open tomorrow within this equilibrium still, I'll be watching for a potential bull entry, knowing that Bitcoin is a 12-hour falling wedge. Just did a crypto live stream. So check out that on our YouTube channel if you're interested in it. But there's a setup where if it's a bullish reaction for equities for the FOMC, Bitcoin will very likely break a 12-hour falling wedge bullish. Again, at this point, the bulls have to have a bullish FOMC reaction, because without it, we know they're not going anywhere with the current recent trends. If we have a bearish reaction to the FOMC, we're right back down at our lows, and bulls don't prove a thing. So it's definitely the bulls that need the help here across the board. But looking at MARA divided by Bitcoin. We've been way weaker than Bitcoin for a very long time. Today stands out. The weaker names showing some relative strength. Again, one day is not enough. When was the last time we saw a bull move in this correlation? FOMC. Nothing huge. But there's a pattern out there. Dollar all bulls. Daily bull flag. 0 red flags. Daily MA12 support. Still up around the highest levels in 20 years on DXY. And with that, the metals are still very weak. Fresh lows on gold and silver. Big bounce last week, but never changed the trend. Stair step up with a higher low every single candle. Stair step down with a lower high every single candle. Just going to look for another 4-hour lower high next bounce. The metal bulls sure need a lot of help from the FOMC reaction as well. Essentially, commodities, crypto, and stocks all want to see a bearish dollar reaction to the FOMC. Oil is still real tight. It's heading back up towards resistance. If we look at a 3-day time frame, it's all about 109.20. Break is on the table this week, and if it doesn't break this week, it will certainly break next week. Burden on bears because we are still forming higher lows overall. Natural gas, very impressive recovery for the bulls to keep these daily higher lows going. We never lost the uptrend. Massive pullback, but a daily higher low. Now another daily higher low. And we're looking back up at the 8054 recent high. This gives oil bulls perhaps a little bit of confidence. Just the fact that there's no indication that natural gas has topped out yet. Have to lose the daily higher lows for the first indication that we have. So overall, I have been only looking to trade bear since 2 Thursdays ago. But that's shifting a little bit depending on what do we do tomorrow heading into the FOMC, and then what is the post-FOMC reaction, and who is leading. If it is a bullish reaction, who is leading? I want the previously weaker names to be leading to the way up. QQQ leading SPY, MARA leading Bitcoin, XBI leading IWM, because then I will look at all that information and say this is just like last time where we bounced massively over 3 weeks. I won't have the same bounce expectations, but it will definitely help me with some confidence in bullish plays. It's a whole bunch of ifs in there. This is me just starting to formulate a trade game plan. In an ideal world, it would play out exactly the same way as last time, where we're green tomorrow. We reject from some resistance levels. We have an initial bearish FOMC reaction. I grab bullish positions. I set some stops, and then bounces follow through from there. We'll see what we get tomorrow. I'll know some more tomorrow after hours, and then it'll be time for the FOMC. All right. Lots to be keeping an eye on. Do good things, and have a good rest of your day. These purple lilacs are now flowering. There's about 7 of them over the yard. There's a white one. And the scent is just massive and wonderful, and you walk into clouds of it. It's edible. You can stick the flowers in your water and drink some lilac water. Some more planting today. We got flowers and zinnias and tomatoes and basil. Some squash. Grabbed a couple hardy kiwis. You need 1 male, 1 female to get fruit. And they said you need a sturdy trellis. I think we've got that covered. Got this flower bed all planted.
Progress on the peas and potatoes, greens, radishes, giant flowering rhubarb.